Is it really time to panic? I wanted to make a quick video here because it seems like there is max fear, even though we're only a few percentage points away from all-time high. Why is that? Is this just all irrational fear? No, not every fear is irrational. There is good reason why people are panicking now. Sure, it could be the all-time high valuations or the fact that stocks are literally doubling and tripling their entire market caps in the span of 6 months. But there's a lot more under the hood, and I'm here to talk about it because there are definitely some new developments in this whole AI bubble that I think cannot be ignored. So I wanted to do a quick video for everyone, and we'll talk about the fundamentals first, such as the fact that Deutsche Bank is considering shorting AI stocks because it has so many outstanding loans that they actually issued in order to build data centers, and they think that they've built too much. And then we'll get into the technicals here because all the gap ups that we saw before the rate cut, before the fact that the China and the US struck a deal, all of that has been wiped out. Now, if you're fans of this channel, you would know that I anticipated that we would fill these gaps, but the selling does seem a little more violent. So is this where we finally break down? We'll get into the technicals towards the latter part of the video. Let's get right into it. First new development, let's start with the jobs. So as you know, the government is shut down and we have to rely on research companies, consultants, etc., in order to try to estimate what the job losses are. And so this morning, as of the time of this recording, November 6th, Challenger came out saying that corporate job cuts have surged past 1 million so far this year, with 153,000 new layoffs just in October. Now, as I said, the government is closed, right? If there is data that refutes this, we don't have it. And right now we are dealing with the longest running government shutdown. And although initially the government shutdown isn't really a detriment to the market, as the market did and continues to be green during the government shutdown, just as it was the last government shutdown, it first of all doesn't give the Fed any information to work off of. So the Fed cannot then guarantee a rate cut in December. And two, the market doesn't know what to expect with regards to jobs. And that when the market doesn't know something that it needs to know, that's when volatility persists.
Announced corporate job cuts, Andrew, in the U.S. surging past 1 million so far this year, with 153,000 new layoffs announced just in October, according to Challenger. That is the worst October since 2003.
Second new development, new information that we didn't know before, is that Deutsche Bank explores hedging their data center loans by shorting AI stocks. Now, does this happen in a healthy market, right? Imagine, like, these banks were so excited about the AI arms race and they wanted to participate that they start giving out hundreds of millions, in some cases billions of dollars in loans. And I'll go over some of the preliminary numbers in a second. But then they realize that they spent too much and they're like, how are we going to get these companies to repay us back? A lot of these companies don't make money yet. And so as a hedge, they're considering shorting those AI stocks. So here are just some of the numbers that Deutsche Bank participated in. And what's concerning here is that there is more under the hood of every single bank, right? If you remember the 2008 financial crisis, and no, I'm not saying this is 2008 yet, but there was so much in terms of leverage as it related to mortgages, mortgage-backed securities, and it didn't really unwind or show itself until the thread was pulled, and it just became a bigger and bigger problem. And so, you know, this is just Deutsche Bank here, but 600 million euros to Eco Data Center to expand AI data centers in Sweden, 835 mil for another data center, 650 mil for CoreWeave, 610 million for another CoreWeave project in Virginia, 1.4 billion to Galaxy. Now, Deutsche Bank is not providing every single dollar, but this is just some of the things that they've participated in. And so there is a lot of leverage there, and a lot of this money they're not going to see in the short term. So if this problem is endemic, and it sounds like it is, because what bank would consider lending you money and then shorting your company? And to speak to that point, just listen to this clip of Sam Altman pushing back when this guy, who's an investor in OpenAI, by the way, is asking him a very legit question.
How can the company with 13 billion in revenues make 1.4 trillion of spend commitments? And you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. Enough.
If you guys were, are doing in excess of $100 billion of revenue in 28 or 29, that you at least would be in position. What?
How about 27?
Yeah, 27, even better.
I mean, Sam Altman just doesn't seem to be a serious person, right? This is the act of a narcissist, where instead of a business person would respond back with a coherent answer, he pushes back with a snarky remark, just pushing it, basically pushing the question out of the way, trying to bully the interviewer, saying, if you want to sell your shares, I'll find you a buyer. But it's a legit question. 1.4 trillion in spending commitments from a company that makes 13 million in revenues, not profits, in revenues. So remember what I said about the AI bubble. Some people agreed with me when I said it was a bubble. Some people didn't. That's fine. But basically, these companies, all we have right now are chatbots. That's it. We know that AI is going to be transformative, right? Was the internet transformative? Yes. Was there an internet bubble and a bust? Yes. AI is going to be transformative, but we are at the point right now where we are front loading all of the build out, and we don't yet have products at mass scale. The only thing we have is chatbots, and that's likely what it's going to be before the first bust happens. And then we start figuring out how AI is going to conform to our everyday lives beyond chatbots. And yes, obviously we are in a bubble. Now, some of the people that disagreed with me said, how can we be in a bubble if earnings are increasing? Yes, earnings are increasing. That does not preclude the fact that we could be in a bubble, right? Think about the fact that, first of all, circular deals themselves are contributing massively to the earnings and to the valuations of these companies. And by circular deals, you know what I'm talking about, the one where NVIDIA and OpenAI announce a partnership. OpenAI is going to pledge to buy $300 billion worth of stuff from NVIDIA. Where are they going to get the money? Well, NVIDIA is going to give it to them. These types of circular deals, every day there's an announcement with OpenAI, right? These become a habitual feature of bubbles. We saw this with the dot-com bubble too. And every time that there is a deal with OpenAI, that company's stock price that's doing the deal with OpenAI, their stock price pumps. Look at AMD, look at CoreWeave. So we have the circular deals, we have the massive amounts of debt, basically companies like Deutsche Bank funding all of these data centers for what? Like, how are they going to get their money back? We have companies like Oracle that are issuing more debt than they've ever have. Companies like Meta issuing debt in ways that they never have before, right? Meta sells 30 billion of bonds. Not only that, but Meta is also issuing debt in the form of an SPV, or a special purpose vehicle. So on top of the 30 billion of bonds that Meta sold, they are actually taking out more debt through what's called an SPV, basically an off-the-books company that they use for financing, and that way they can keep it off of the balance sheets of Meta, because the financing is going through another special company that is set up just in order to inherit that financing. And if that's not enough, OpenAI is now asking, or there was a report that it asked the US government to provide loan guarantees for more infrastructure expansion, right? So not only are companies like NVIDIA, AMD going to, finance OpenAI's expansion, but they want the taxpayer to do it now. Now, there were reports that came out that said that Sam Altman clarified that no, we don't want the taxpayer to pay for our expansion. But I mean, that's Sam Altman talking, right? Like, he'll speak out of both sides of his mouth. I personally don't trust the guy. I don't know if you guys do. So I'm not here being a perma-bear. You guys know that I'm very realistic when it comes to where I think we are in the market. Back in April, I said there is more risk not to invest here than there is to invest. And we are definitely getting to the point where, in my view, in my estimation, you could disagree with me, there is more risk to invest up here than there is not to. It's all about a risk reward trade-off. I don't care about being right or wrong. Is there enough trade-off for the risk that I'm now carrying? All right, let's talk about the technicals real quick. Is a November rally out of the picture? No, of course not. So we had 4 gap ups. On the left, I have QQQ. On the right, I have the SPY, right? Very similar charts. We had 4 gap ups. Now, it started to look like an exhaustion gap up, right? There are breakaway gap ups where if we take a look back here, I'm just going to isolate QQQ because it's a little easier. But when you have these breakaway gap ups, right, that don't get filled immediately, these are breakaway gap ups. At the top of trends, or when trends are exhausted, what you tend to see are these multiple gap ups, and they do not continue. They get filled quickly. You don't want to see this. When a gap gets filled immediately, that means that this is likely an exhaustion gap up. And when you take a look at the volume, right, it's not like it was low volume on these fills. When you see heavy volume on the gap ups and heavy volume on the fills, this tends to signal exhaustion here. So, you know, this is not a situation where we are on the verge of a V-shaped recovery and we are gapping up and then continuing, gapping up and then continuing. This is at the top of a rally. We made a new all-time high, gap up, gap up, gap up, gap up, and then filled it immediately. So right now, where the S&P, as of the time of this recording, where the S&P and the NASDAQ are currently sitting, this obviously was previous resistance, now acting as support, right? The last gap was filled. If you recall what I said on October 30th, I said after 4 consecutive gap ups in the NASDAQ, expect a pullback before ripping higher, looking for it to fill the weekly gap. Now we filled the weekly gap and we're just in a waiting game. So is there, like I said in the outset, is there a reason to panic? No, not yet. Is there a reason to be concerned about a bubble? Yes, which is why people panic when there are itty bitty drops here. But we are not even at the 50 EMA. We are just at the support resistance level and we filled the weekly gap. That's all that happened. Now, if we actually break structure to the downside, right? If we break market structure, if we fall below the 50 EMA, we break below this low, we break below this low, yes, then I think we are in a world of hurt and we will likely see a pretty big correction. Also, we have not seen very many corrections in this rally. There were many 10% or more corrections in the late 90s before we finally crashed in 2000. There were many. And so far in this day and age, or in this rally here, we've really only had one 10% or more correction, and it was Liberation Day. That was it. So although, yes, my personal opinion, we are in a bubble, I don't think that we are just going to start crashing and that's going to be the bear market. I think that we will have multiple 10 to 20% corrections before the final, 50, 60, 70% bear market that will end this bubble within a couple of years. Now, if the government reopens, which I think will happen soon, I don't think that we'll go throughout the rest of the year with the government shutdown. I think the government will reopen. It's just going to be hell, especially imagine if there are no TSA agents by the time that Thanksgiving rolls around. I do think that the government will open. I do think that the Fed is going to cut rates in December. Obviously, we're going to have an administration-friendly Fed next year. The Fed already said that they're going to stop quantitative tightening, which means back to easy money. So there are reasons to think that the euphoria can keep going. If you guys remember back in, or I don't know, some of you are too young to remember that, but back in the late 90s, what people don't realize is how violent the melt-up can be. So just from October 99 until March of 2000, the NASDAQ went up by 100%. 100% in like 5 months. And if you look at junk bond spreads, these are basically junk bonds over something safe like US Treasuries, we're still fairly low. It's not showing panic here in the same way that we saw it rising in 2022 before the bear market, or even before Liberation Day when we saw it rising. Like, it's still fairly low. That could be because we don't have employment data. There is a snag where if the government reopens, which I think it will very soon, they're going to be forced to release employment data that we haven't had for a while. Now, I personally think, just from a skeptical standpoint, I personally think that the new BLS chief, who is very friendly with Trump, I don't think that he would risk releasing bad jobs data. So I'm very skeptical. I do think that obviously numbers like CPI are cooked, jobs numbers can be cooked, regardless of who it is. It was with Biden and it is with Trump, right? I don't think that they're going to open up the government and then Trump is going to let the BLS chief release bad jobs numbers. So I could be wrong. They could release bad numbers and we'll start to see these high yield spreads move up. You'll see volatility go up, et cetera. The Fed will have to come in and act and slam rates to the ground. Then the whole picture of the market will look different. But I really wanted to make this quick video here. I don't know actually how quick it will be by the time I edit it, because I know people are panicking now and they want answers. And that is my perspective. It's not that my perspective is the only one, but I get asked every day on all channels, whether it's Instagram, YouTube, Discord, Twitter, to provide an update. So hopefully this helped you. If you have any questions, leave it in the comment section below. Currently, I don't have too many swings open. As you know, Marvell hit my target. I have leaps on Marvell that are still up 90%. I told you guys about Iron. That also hit my target, fully out of Iron when it hit that 74 level. I still have a swing open on Tesla here, and I still think Tesla will get to that 488 level by the end of the year. Meta hit my buy point for the long term. I don't have a swing on Meta. So obviously when I'm ready, I will send out some more swings. Obviously I go live every single morning at market open and day trade as well. On this morning's live, I took 2 trades, had 1 win, 1 loss. And if you want to trade live with me every single morning, link is in the description below. And do not forget that on November 8th and 9th, I'm doing a free trading accelerator. Options on the first day, futures on the next. We're going to go into options, swing trading, and day trading. And the next day we'll do futures day trading. So you have to be signed up. Link is in the description below. If this helped you out at any point, give it a big fat thumbs up. Let me know what you think down below in the comments. And let me know if you have a question down in the comments. But don't ask me, should I sell? I'm not your financial advisor and I can't respond to thousands of comments about whether you should sell. Subscribe to the channel, hit that notification bell, stay safe out there, traders. Peace.